Warren Buffett has been buying this stock hand over fist right now. And I don't know if you're a bull or a bear right now. I've got a lot of technology trades on where I'm looking for the market to go up with interest rate cuts. However, I want to be well diversified. So I'm going to look at this insurance company, which Warren Buffett is banking heavily on as well. But wait, Fed Chair Jerome Powell just spoke at Jackson Hole and talked about interest rate cuts that are coming soon. Well, he didn't really say how many and how much. So if it's less than the market anticipates, there could be a drop in the market. So just in case things take a turn for the worse in the short term, I'm going to show you this trade that should do well should there be a recession and the market moves down, or interest rates come as expected and the market takes off. It should do well in both markets. Be sure and hit like and subscribe down below. Also download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course as well if you want to dig into the options a little bit deeper. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Use the link below and join Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. You also get the free charting software. It's a zero commission online platform brokerage. All right, guys, the stock I'm talking about is Chubb, ticker symbol CB. Warren Buffett's Berkshire Hathaway fund owns 6.7% of the insurance company, and he just purchased quite a bit more this last quarter. He now has over $7.4 billion worth of Chubb. Ryan Vanzo from The Motley Fool wrote an article, and he talks about two stocks that will thrive in the next recession, and he talks about why. There's almost never been a bad time to bet on Warren Buffett. So he starts out talking about Berkshire Hathaway and the fund that Warren Buffett has and how it's done better than the S&P 500 during times of recession. From 2010 to 2015, Berkshire stock outperformed the S&P by more than 20%. It did have a fall during the recession, but it also outperformed during the recovery. So it was took less of a hit during the recession and then outperformed during the recovery. This May, it was also revealed that Buffett's secret position was none other than property and casualty insurer Chubb, ticker symbol CB. And his position is around $7 billion. And Chubb, in the 5-year period after the previous recession, the stock gained 157% of its value. Like Berkshire, the company has a long history of prudent allocation. So Chubb has repeatedly made multi-billion-dollar acquisitions as other insurers look to pull back during weak times. So it actually takes advantage of the recession and that period in order to acquire other companies. And you can see right here that Chubb has performed in the last 1 month, it's up 1.9%. Last 6 months, it's up 8%. Year to date, 21%. And over the last year, it's up 37%. So it's a steady trend up. And then over the last 5 years, 76%. So it is a solid stock. So what I'm going to do is I'm going to punch in ticker symbol CB for Chubb right here on the Tasty Trade platform. There's a link down below. It's a great platform and brokerage for trading options. The IVR is 35, so it's a good chance to sell options and collect more premium. Their current price is $275 and it's down 0.7 today. So I actually like to put on trades when I'm long on a down day like this. So I look to go out about 45 days to expiration. And we're looking now at the October 18th, which is 53 days to expiration. So I'm going to click on that while I'm on the trade tab here and open up the October regular option chain. Then I'm going to, this orange line right here is where the stock is trading right now, 275. And the puts are on the right side right here and calls are on the left. Now, if we're going to sell, I'm going to look to sell the 270 put. So I'm going to click on the bid, and you'll see that it credits $4.20, and then I'm going to buy the 260, so going $10 wide. So the most I can lose is the $10, but I'm collecting $2.33. So my max loss is the $10 minus the 233, which is 767. However, since one contract controls 100 shares of stock, this is actually $233. This is actually 767 max loss. It's also the buying power effect. So this is the amount of money that we're utilizing to place this trade. So $767, and we're collecting $233. So you can see the return on investment for that is going to be really good. Let's see. So 233 divided by 767. 233 divided by 767 equals 30%. 30% return on equity. And that is pretty good for 1 month, actually for 53 days. So we can, this is the table mode, but let's click on, and actually, yeah, we're right in the center. We're going to click on the curve mode, and you can see the profit zone. So we can actually drop down below 275, and we're still profitable down to actually $2.33 less than this. So right around that 267 mark, we're going to still be profitable. Anywhere above here, and it's been trending up, we continue, we collect that full $233 when we place the trade. So we've got a 65% probability of profit, so better than 50%, and I'm confident in this stock. We hit review and send and place the trade. All right, guys, this caps off today's video. Be sure and download the free options workshop in the link below. Remember to hit like and subscribe. Leave a comment. Let me know what you're trading. Any questions that you have, I answer every one. Join Mumu, get your 15 free stocks. I'll see you in the next video.